Hello, 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 and good morning. It's me, Kenny Polcari, and here I am with my Dunkin' Donuts coffee. This is only the first one today, so I'll not be as riled up as I usually am, but maybe I will, because you know how it is. You know how it is. Okay, so look, today is February 9th, 2022, Wednesday, and here are the things that you need to know about what happened in the markets yesterday, what's happening today, and kind of what the tone is. Earnings continue to help support the markets, for sure. Now, doctors and analysts are changing their dire tune. Guess what? Suddenly it's all good. Masks come off and stocks rally. Big, boring, and beautiful multinationals are in the spotlight. I've been telling you that since the end of last year. Pay attention. 10-year yields now back off to 1.91% after kissing 1.96%. And what are we having for dinner today? We're going to have the Bucatini in a sweet orange bell pepper sauce. It is simple to make and delicious to eat. 10-year treasury rates cuddled right up to 1.96%. And that sent stocks higher yesterday. Yes, it's not. I haven't misspoken. It's not a typo. Stocks rose strongly. The Dow adding 372 points or 1%. S&P up 38 points or 0.8%. The Nasdaq added 180 points or 1.3%. The Russell, by far the winner, adding 33 points or 1.6%, while the transports tacked on 168 points or 1.1%. Oil fell by 1.7%, while gold continued to move higher, closing up 0.3% or $5 an ounce to end the day at $18.28. And the story of the day? The Fed seized $3.6 billion of Bitcoin that was stolen 5 years ago, as the husband and wife in New York City tried to launder it through the system, setting up the conversation today about the blockchain and how the feds followed the money. The recent rally yesterday being credited to the confidence that investors now have in the economy's ability to grow in the face of rising rates and talk of balance sheet reduction. The confidence now being fed by the same voices that raised all kinds of concerns about how the Fed needed to be aggressive, they needed to reduce the balance sheet, they needed to do it sooner versus later. They jawboned the markets lower, all buying it on the way down, and now they're jawboning the markets higher, just selling those same positions on the way up, which is exactly why you don't try to time the market. You stick to the plan. You maybe change your allocations a little bit to tweak it at times, but you stick to the plan. Suddenly, the move towards 2% in the 10-year is no longer the big bad boogeyman that they made it out to be. And 3-year yields? Don't be ridiculous. Not happening, according to some people. Analysts and economists who have been warning of the danger of rising rates have suddenly now done an about-face, suggesting that all of the recent chatter about 5 to 7 hikes and bigger percentage point moves is nothing but chatter. Inflation, while uncomfortable, is not going to continue to move higher, and the Fed has it under control. So there it is, nothing to worry about. And that coincides with the latest Dr. Fauci narrative and that the pandemic is nearing an end. CNN tells us it's time to drop the masks, and states like New York, New Jersey, Illinois, California are all getting ready to drop the mask requirement. You don't need it anymore. Suddenly it's all good. And you hear them saying, we protected you and your kids. And oh, by the way, the midterm elections are coming and we'd appreciate your support. I mean, it's all a tangled web we weave, but it is all part of the conversation. Financials, XLF, consumer discretionary, XLY, tech, XLK, basic materials, XLB, all leading the way higher, up about 1.3 to 1.5% yesterday. Energy, the XLE, which has been on a tear, was the biggest loser, shedding 2%, leaving it up, still up 23% for the year. But I've been saying and doing, big, boring, yet beautiful stocks are being eaten up. Not beaten up, they're being eaten up by investors. The S&P High Yield Dividend Index is up 3% year-to-date versus the S&P, which is down 5% year-to-date. Names like IBM, Merck, ExxonMobil, Telephone, 3M, Citibank, Chevron, JP Morgan, Bristol Myers, General Mills, Newell, all included in the index. What you notice is they are big American multinationals, not sexy, not dramatic, just boring big America. And that's fine with me, and it should be fine with you if you're expecting turbulence in the market, and it appears that many are. The value trade, the SPYV, rose 0.7%, leaving it down 0.7% on the year, While the growth trade, the SPYG, was up 1%. Great, but it's still down 9% on the year. And that does make some sense considering the beating that the growth stocks have taken this year. So when the market rallies, expect the fast money to go to the names that might burst higher in the short term. Think of all the oversold tech names. Now, while the four major indexes are still in negative territory, the Dow, which is the epitome of value, is only down 2% year to date, while the NASDAQ and Russell, epitome of growth, each remain lower by 9%. There wasn't any economic data yesterday to drive the move, and there isn't really much today, and that's going to make a difference either, right? But it is tomorrow's report that everyone is focusing on, and that's the one that the big boys are trying to diffuse. Calls for the consumer price report to show a 7.3% year-over-year increase is the expectation. We already know that. Some expect the report to be even more than that, while others are trying to talk investors off the ledge, saying that it's nothing to worry about. The strength of the underlying economy is going to carry us through the day. Okay, well, we're about to find out. The other part of the report is going to be the real average hourly earnings year over year. What will that show? Are we going to see more upward pressure as well? And after this report is Tuesday's PPI report, right? The Producer Price Index. And that is expected to have a 10 handle on it. So I can't wait to see how they position that report in the context of the inflation argument. You can already see it happening. Now they're parading out Fed chairs, Fed presidents to tell us not to worry. This morning, Dow Futures are up 200 points. S&Ps are up 33. NASDAQ's ahead by 140, and the Russell's up 15. Right? All pointing to big gains again. Earnings continue to top the headlines, but expect this to end soon as the majority of earnings are already out. And we found that 76% of these reports have beaten on the top and bottom lines, returning to what is considered more normal. The 10-year Treasury is down 4 bips, yielding 1.91%, adding fuel to today's rally. Central bankers now telling us that the market is getting ahead of itself in pricing out rate hikes for the year, as the selling in the bond market eases. And as this eases, keep your eyes on the tech sector. Hint, that's again the biggest opportunity in a short-term quick gain. Cleveland's Loretta Mester is due to speak at a conference today, so expect to hear more about her comments and what they might point to in the terms of Fed thing. Rafi Bostic was on CNBC this morning trying to calm the market, suddenly talking about only 3 rate hikes. It's crazy. It's crazy. European markets are all higher for much of the same reasons. Better earnings, calming concerns over global central bank policies. European bonds are also finding bids, and that's sending yields lower on some of the sovereign debt that has also surged higher in the past month. Investors across Europe are also awaiting the U.S. inflation report due out tomorrow, and at 6:30 this morning, European markets were all up about 1.5%. This morning, crude oil is trading down 0.5% at $88.90 a barrel as it takes a breather after its recent surge higher. Russia-Ukraine continues to simmer, but news of that has suddenly been pushed to the back page for now. And talk of higher energy prices in Europe have also been moved to the end of the line as global leaders work to find a diplomatic solution. My guess is that Vlad is not going to play nice in the sandbox, and that's going to leave Xi to decide what he's going to do about Taiwan. I think those are two events that the market is not paying enough attention to. Doesn't mean it's going to cause a big crash. I just think you have to be paying attention to it. So both these stories continue, so sit tight. Bitcoin and Ethereum not doing much of anything, continuing to tread water right in line. Bitcoin trading at 43,500 and Ethereum is trading at 3,100. The S&P closed at 45.21, up 38 points. Now it tested as low as 44.65 and as high as 45.31 yesterday. This morning we're about to test the upper range of that trading band. Right? I've been telling you we're in this 44.50, 45.50 range. We're going to test it today. My sense is that we're going to test that intermediate term trend. We're going to break through 45.50 and go to 45.70, which is the trend line, before we stall. Remember, tomorrow's CPI report is the focus. And so these past couple of days be that buy the rumor and then sell the news type of an event? We'll find that out in about 28 hours. Remember, you always stick to the plan. Be happy. Feel free to call me to discuss. I'm always happy to talk about it. So what are we having for dinner tonight? So this is Bucatini, which is like a spaghetti, but it's thicker, in a sweet orange bell pepper sauce. It sounds, listen, you just have to listen to me because this is really good. For this, you need a pound of Bucatini. You need the vibrant orange bell peppers, right? 2 or 3 of them. You wash them, slice them thin. You need diced onion, you need garlic, you need olive oil, salt, pepper, you need fresh basil. You can use hot red pepper, that's optional. And you need plenty of pecorino romano cheese. So bring a pot of salted water to a rolling boil, put it on the back burner, just get it ready for when you need it. In a large saute pan that's going to be able to accommodate the pasta, you want to heat up some olive oil, saute the sliced garlic, and now add in the diced onion, the sliced onion, and saute that until it turns loose in 8 or 10 minutes. Now add in the thinly sliced orange peppers and saute those until soft, right? Maybe you're going to use 2 if they're big. 2's going to be enough. Season it with salt and pepper, taste it. When it's done, you want to run about 3/4 of that through a food processor to blend it. And then add it back to the saute pan, leaving chunks of orange bell pepper. Now cook the pasta until al dente. You know how that is, 8 to 10 minutes. Strain it, reserve a mug full of water. Toss the pasta in the saute pan, turn up the heat to medium, mix it well so the pasta is well coated. If it looks like it's drying out, add a little bit of the pasta water to re-moisten it. Now add the fresh basil, some hot red pepper. Here it's optional if you want to add that, and plenty of the Romano cheese. So make 2 handfuls is always good. 3's even better, but that's up to you. In any event, you could always have more cheese on the table for anyone that wants more cheese. That would be someone like me, always putting more cheese on my pasta. I can never get it. It's so delicious. Anyway, toss it. Serve it in warm bowls, and then enjoy it with your guests. And you can have this with, I would have a white wine with this, a chilled white wine. You know me, I don't have to tell you, Pinot Grigio Santa Margherita is my go-to dinner white wine when I'm at home. In any event, it's a rainy day today, right? So I'm not sure what that says about the markets. Maybe it says something, maybe it doesn't. But you can see outside, it's kind of raining. The traffic is slow. There was lots of traffic on 95 this morning going south, a couple of accidents. So I don't know if that says anything about the day ahead. Either way, until I see you tomorrow, take good care.